Hello, I'm Donald Leggett, and welcome to the latest London South East CEO interview. I'm joined today by John Cronin, Executive Chairman, and Heather Peacock, Group CFO from AIM-listed CyanConnode, a technology company which provides smart meters for utilities using radio wave connectivity. Welcome, John and Heather. Thank you very much indeed for joining us today.
Yeah, great to be here, Donald. Thank you.
Fantastic. Really cool. And yes, and you, Heather. Now, Heather, you've just announced results for the half year. How happy are you with progress?
Well, I'm really pleased to report on what I feel is an extremely encouraging 6 months, particularly with most countries in which CyanConnode operates being in lockdown for the first half of the period. There's been a significant increase in the volume of modules that we've shipped to customers, and then obviously the corresponding increase in cash collection that's resulted from that. Key highlights from the period include an increase in revenue of 48% to just under 1.5 million, from 1 million in the first half of 2019. There's been a significant increase in the gross profit of 74% to £831,000 from £477,000 in the first half of 2019, and a reduction in operating costs and losses by 32% and 55% respectively from H1 2019. We've had some significant order wins during the period, and then the continued rollout and in fact the increased rollout of projects in India, Thailand, and in Europe. And then in addition to that, the revenue in the 8 months to the end of November, so giving an update just past the period end, is that the revenue in the 8 months exceeds the revenue for the whole of the previous 15-month financial period. So we do believe that we're making great progress in all areas of our business, and we're really optimistic for the next period.
And John, picking up on the operational side of things, if you could give us a brief overview, things are getting back on track, I understand?
Oh, absolutely, Donald. Yeah, we've made encouraging operational progress, both in the period and also post-period end, despite uncertainty in the world. Notably, the company has won a substantial follow-on order from the state-owned utility MPWZ, and this is for 350,000 of our OmniMesh modules, and this is worth in the region of £6 million sterling. Now, this is the second largest order the company has got to date, and it brings the total MPWZ order to something like 470,000 in one utility. And this is alongside the restart of another large order of 430,000 modules that we got for JVVNL via Genus Power, a meter manufacturer partner. And in March, we also got a follow-on order from MEA in Thailand, another utility, for in excess of 206,000 units. And this had a total order value coming to more than $3 million.
Okay, and if we put those two, we've heard about those two orders. What else is happening in India, your most important market? Summarize the progress you're making there.
Absolutely, Donald. I mean, consistently we state, India represents a substantial opportunity for us. It is our biggest market, and we continue to hold a leading position in this market. And India continues to significantly adopt smart metering technology, which we at CyanConnode are a leading provider in that country and have been for the last 8-9 years or so. Now, during the first half of the current financial year, there has been significant increase in activity in the Indian market at the Government of India level, where they're moving forward to push for the deployment of 250 million smart meters. Now, during the period, CyanConnode saw the deployment, as I mentioned, of the largest order to date, the 430,000 modules, and that got resumed, and also announced the winning of that second order that I just mentioned of 350,000 modules. And as also mentioned, this order was for smart metering for the Indian MPWZ and JVVNL, and they're spread across 5 different towns within India. Now, the value of all the orders that we are currently deploying in India is approximately 1.8 billion Indian rupees, and put that into sterling, that's about 19 million pounds sterling. And the majority of these revenues, of these orders, that is, will be expected to be recognised over the next two years, also with payments secured against letters of credit, which is the first time that we've had letters of credit from our customers this year.
Okay, perhaps an obvious question, but why the new management team in India? I think I know the answer. I think I've just heard the answer, really. But tell me the significance of this. It must be a big milestone for you as a company.
Absolutely. It's really the reason, I suppose, why we appointed a new, extremely experienced and highly regarded senior management team is to take the Indian business to the next stage, the next level. And we believe that we'll provide the group with a strong platform, or they will provide the group with a strong platform to participate in this government's 250 million smart meter rollout in the next number of years. And just briefly, you know, when I talk about Ajoy Rajani, he's the CEO and MD of CyanConnode India, he's got a background coming from Reliance Energy, where he's rolled out smart metering across several utilities for them. And then we have the new chief operating officer that came from Trilliant, who's our largest competitor. And he joined us and come and has to join us, more importantly. And Ratna Garapati, he's deployed 1.5 million smart meters in head-end system software side of things in India, but also for scale and experience, he's deployed 20 million consumer billing systems to ESL.
And let's move to Thailand, another of your big markets. The repeat business order you were hoping for has happened. Does that boost the credibility of the OmniMesh technology in country? Does it make sales there easier? You know, does Thailand become your new India?
Absolutely, Donald, spot on. So we're delighted to receive that follow-on order in March for over 200,000 OmniMesh licenses. And this increased the total value, as I mentioned, to over $3 million. And the license will allow MEA to connect up to actually 240,000 smart meters to the OmniMesh head-end system, the software that we provide, and that will serve the Thai Smart Grid project really well. Everything is progressing well. We've installed as well a number of units into a 42-floor tower block, and that's nearly onto completion. So that's really good with our technology. The radio technology that you mentioned right at the beginning is working well and doing what it should do. And we've got a very good relationship with JSC and Forth, both of our technology partners in Thailand, and they've proven that they can outperform the competitor solutions in the market by having the right technology and the right partners and the right customers.
Okay, your turn again, Heather. By their nature, half your results are backwards looking. I mean, they tell us about what happened in the past. Mm-hmm. So what kind of trading momentum have you seen in the post-period end? In other words, the period since then?
Well, we've really seen an increase in the number of modules that we're shipping. So, you know, we're seeing the highest volume that we've seen really in the company's history. We've shipped a further 121,000 modules just since the end of September. And of that, actually 33,000 was just in the last 2 weeks. And we're expecting to deliver a lot more in December. So we've got a busy Christmas period ahead of us. And this takes the total volume of modules shipped this year to 213,000.
Okay, that all sounds very positive, but the pandemic must have disrupted business over that period, over the last 9 months or so. So how are things now? Are things recovering in country?
Well, you know, we've continued to work hard to tackle the risks that have been put in place, and we've implemented policies to mitigate against them. We talked earlier in the year when the first lockdown came about things that we did to protect staff, which has always been our first and foremost concern is to protect the well-being and the health and safety of our staff. So as far as possible, we get people to limit travel where they would normally travel. And the software engineers in the UK, the whole UK office has been set up. As far as possible, people work remotely, but the office is available for people to go in and work, particularly hardware engineers who need to go and actually test products. But we've got all safety equipment, we've got temperature guns, we've got masks, sanitizers, and various health and safety procedures, social distancing measures as well, to ensure that people can continue working. And then one of our biggest things, especially as we're ramping up in delivery, is making sure that we can secure the supply chain. So, that basically the engineering team's development work is all on track, and we're just doing everything we can to ensure that we keep deliverables on track.
So I'm going to very quickly ask you a cheeky supplementary. Whereabouts do where does the R&D happen, and where do the modules actually get constructed for that supply chain to feed into?
So the R&D takes place in Cambridge, predominantly. That's where the core development work happens, and we do have engineers in India, but the key development is in Cambridge. And then we buy components from a number of different places around the world. Those all get ordered at the moment through. So for the Indian market, they get ordered through our contract equipment manufacturer in India. They get brought into India, and then they will assemble the product and they will deliver to customers within India. And for other parts in the world, we use other contract equipment manufacturers in China. And they will also order in from the various component suppliers, and then they will ship to our customers in the relevant parts of the world.
So given that you operate all over the world, there must have been a degree of disruption. And is it any less now than it has been?
Well, right at the start of the year, as we know that, China was the first country that was sort of affected, but they quickly got procedures in place similar to the sorts of procedures that we have, so that they didn't have to shut shop. They put in place safety measures, things like thermometers and temperature guns, to enable themselves to continue manufacturing. We saw in the first couple of months of our financial year, when India was in a complete lockdown, there were very few, if any, deliveries in India, but that started to increase sort of from the third month. So from June, July time, we started delivering into India, and then it's just completely, increased since then. We did, even in the earlier part of our financial period, we were able to deliver to places like Sweden and to Thailand, because they were worst hit.
Good answer, thank you. Your funding position, what does that look like? And what are your funding needs going forwards?
Well, we continually monitoring our cash position and our cash flows for deploying against our current business model and business plan don't indicate a need for funding. It's over 2 years since we did a placing, and we were very conscious that we wanted to start delivering and managing, and we've managed our costs and our cash to avoid doing a placing. And things that we've done to ensure that we've managed that was securing letters of credit and advance payments against orders. And all of this has improved our working capital cycle. So, if we do find that there's a need for working capital or cash requirements for growth or for new business models, then we would first and foremost try to secure facilities such as debt facilities to do that.
Okay, my final question to you, Heather. I know that not all retail investors are happy with the pace of progress. What would you say to them? Why should they continue to be holders of the stock?
Well, we recognize that 2019 was a difficult year. It had Indian elections, and there were a number of factors that affected the business, but we've made significant progress in the last 6 months, which have been a difficult 6 months for many companies around the world. And we've made even better progress since period end. So we're really looking forward to bringing the momentum into the second half of this financial year. We've got a strong pipeline of new contracts and orders in our key markets. So we're hoping that continues and drives the momentum going forward, and then eventually drives us to, increased revenue and profit growth for the company.
Okay, very good. And John, what are the next operational steps for 2021? What news flow can we expect going forwards?
Yeah, so really the next 12 months is a continued focus on delivery, collecting the revenue and the cash, very important, the cash from all of that. And focus also on winning further orders to increase the order backlog, so we keep the hopper fed and traveling through the business, and then ensuring that we do have sufficient cash for the next 12 months or more. And then also looking at further opportunities for focus and growth. So looking at, as we've mentioned already, Donald, new revenue models, software as a service. This is where per meter per year, over a number of months, and it can be 7 to 10 years, for instance. And this OPEX model is really the way we're going to get scalability through the huge opportunity of 250 million units opportunity in India. And, we can assume something like 20 million will be coming into our plan to provide significant growth over the next 5 years, really. That's what we're looking at. And then, of course, away from India, looking at further opportunities then in Thailand with our partners out there. And then the new territories, we've got a lot going on in UAE, in the Middle East, and also Nigeria as well. And we're expecting some good results from them in the first half of next year.
And you don't feel you might be spreading yourself too thin by going into new territories like Nigeria?
No, because what we tend to do is use other people's resources, other people's sales. So all of those are through partners. It's a different model that we have for the rest of the world than we do in India. In India, we have our own employees, right from the salesman, the technical person, delivery person, HR, finance, etc. In these other territories, we go to market through partners and they come to us. So we've got a rifle shot approach and where the opportunities are, and we just input to them, and they're the ones that's fronting then to the customer with their resources.
Okay, my final question, John, what does the outlook for Cyan look like in 2021?
Well, as Heather has mentioned already, the group has a solid pipeline of opportunities ahead of us, and we look forward to delivering a continued robust financial performance. And I do see that this year is a big turnaround for us, which will be our best year yet, and that's proven with the revenues in the first 8 months exceeding the whole of the 15-month previous period, which was made up of last year. And so, if you look at the last 2 months, it suggests a revenue of just over £1 million in 2 months. So work that through in your mind as to the next couple of months, what that means going forward to the end of the year. So, from March to date, we've demonstrated really our ability to accelerate module deliverables while the orders are increasing, and we're confident that we can continue to, accelerate and execute successfully on our growth strategy.
Okay, many thanks to John Cronin, Executive Chairman, and to Heather Peacock, Group CFO from CyanConnode. Thank you very much indeed for the update there. To see
Thank
more,
you, Donald. Pleasure.
It was my pleasure. To see more interviews like this one, you can follow us on Twitter at London Southeast and at Donald Leggett, that's me, or you can subscribe to the London Southeast YouTube channel. Thank you very much for watching and do stay safe.